Hi everybody, hope you are having a good day. Welcome to Building Wealth YouTube channel. And as you can see on my portfolio, it grew for around $1,500 in last week. The biggest reason for that is, unfortunately, because I have funded it with around $1,100. Rest of it is basically capital gain, because my Novo Nordisk stocks went up actually a little bit in the last week. I didn't buy anything to transfer additional money to this account in the next several weeks, because if markets continue decline like this, I think in a very short period of time we will have many really good long-term buying opportunities. Because of my Novo Nordisk company, you can see on this chart that my advantage compared to S&P 500 actually widened in last week, and this really makes me happy because one of my main goals is to outperform S&P 500. If you check my profit chart, you can consequently see that I have actually earned around $450 this year, while the market have corrected for quite a bit. So let's move on now on interesting things which happened on financial markets last week. As you can see here, Fed cut interest rates by 0.5% to combat virus fear. That came as a really big surprise, because it was emergency rate cut, and those doesn't happen really often. As you can see here, they happened only several times in history. For example, during the Russia crisis, tech bubble burst, slumping economy in 2001, 9/11 terrorist attack, subprime mortgage collapse, etc. etc. So a lot of people are of course questioning if this was necessary, or is Fed panicking. Not only they have made emergency rate cut, but usually when they raise or cut interest rates, they do it by 0.25%. And as you can see here, they this time slashed rates by 0.5%. Maybe they know some data that we don't, because most of the macro data still are yet to come. Or as I have already said, maybe they are just panicking. But even if they are not panicking and they are doing this because we are going to see some trouble in economy, it is not sure how much this rate cut can help if people continue panicking. On this chart you can see Fed term repo operations, which happened after Fed cut rates by 0.5%. And on this green line you can see how much money Fed borrowed to lenders. And on this yellow line you can see how much they asked Fed to lend them basically. On the red line you can see how much that oversubscription was. Basically what this shows us is the system needs a lot of money now, and that there is basically a liquidity problem. Something is happening under the hood. The question is what exactly. This S&P 500 chart reminded me on how for months, like since November of last year, we didn't have basically any volatility. We had really smooth ride to the top. And now in last 2 weeks we are having like wild roller coaster ride. We've had several days of 3 or more % move on the downside, and then 2 days ago, after Super Tuesday elections, where Joe Biden won most delegates, which most of the people can confirm was quite surprisingly, markets skyrocketed. S&P 500 went up for almost 5%. The reason for that is because investors, let's put it nicely, really dislike Bernie Sanders and his ideas, because he wants to tax wealth, and if you tax billionaires, they will have to sell their stocks every single year basically, and that would actually 100% impact stock markets. So after Joe Biden surprisingly won most delegates, stock markets went up for almost 5%. And today again we have huge move, almost 4% in S&P 500 and Dow Jones, but unfortunately we are again going down. Coronavirus is spreading in whole of the world, in most of the countries, as well as in the US. You can already see San Francisco being empty downtown. Elections are something that will be interesting to follow this year, but let's move on for now. As I have already told you, I'm tracking around 100 or so stocks on my watch list. And today I have decided to share several of them which might be interesting to you or which are interesting to me, and I will tell you what do I think about those. Are they maybe a buy now, or I'm going to pass on them for now. So the first one is Carnival Corp. Ticket is CCL. As you can see, in last one stocks almost half. From $43 it is sitting now at 28. Actually today is down almost 14% because there is coronavirus case probably on one of their cruisers. So are there cruise companies? They have around 100 ships operating, and of course reason for their stock meltdown is all of this uncertainty in the world, which is causing a lot less demand for tourist trips. in all segments, including this cruising. But if we check fundamentals, they are trading now at around 7, PE of 7, which might sound really cheap. But the thing is, we do not know how big of the impact is this coronavirus going to have on their quarterly earnings. You might buy stock now and you might think that you have a stock which is, trading at around PE 7, it is yielding you 10% dividend yield, but suddenly after quarterly earnings go out, they might even have negative earnings, which might overnight make your 7p stock 10p stock or 12p stock or 20p stock. So the problem is this uncertainty. That is why stock is cratering and nobody knows how far is it going to go. Another thing that is carrying me around this stock is balance sheet. This company has almost $10 billion long-term debt, and since we do not know how long is this problem around coronavirus going to last and how big of the impact it is going to have on this company, I would avoid it for now. I would rather pay a little bit more for this company after I see coronavirus issue has passed than buy it now and risking more losses. But I have to admit that on this price, this stock is really tempting. The next stock I wanted to talk about is Facebook stock. As you can see, in last 2 weeks, Facebook went from $220 to $185, which is quite dramatic correction for a company this size. But it is still trading at PE 30. So I wouldn't say this company is cheap, but it is one of the companies that I'm watching closely, and if it drops another 10-15%, I will probably buy a little bit of Facebook stocks. They have rock solid balance sheet, they have around 60 or 70 billion US dollars cash, they have zero debt, and as you know, they are like having monopoly with Google digital marketing field. The sole reason why I have recently purchased Google and not Facebook is because I feel that Google is a little bit more diversified, and because Google is a little bit cheaper and balance sheet of Google is even better than Facebook's. But they are both great companies, and I will probably some point of the time own both of them. Third company I wanted to show you is Wynn Resorts. They are basically a gambling company. They have casinos in several cities like Las Vegas, Atlantic City, and of course Macau. And since Macau is in China, they have really felt this correction caused by coronavirus. Macau tourist traffic is down around 80%, and they have even had to close one of their casinos there. So they went from 100 and almost 50 US dollars to 96 bucks at the moment of recording this video. Their balance sheet isn't so perfect, but I'm following that stock because its stock price could fall really deep, so it might eventually become interesting long-term investment. And last stock I wanted to talk about today is Activision Blizzard. It is a gaming company, it produces video games, and as you can see here, in last month it actually didn't fall at all. It went from 64 US dollars to around 62. Which is really surprisingly, and it's quite resilient since overall market S&P 500 corrected by more than 10%. The last chart of the day I wanted to show you is Shanghai Stock Exchange chart. China's stock exchange is really resilient, which is really surprising to me, because their country is source of coronavirus and country with most cases and more deaths caused by coronavirus, and its economy is most impacted at this moment by the disease. So it is really interesting to me to see all of these Chinese stocks like Tencent, Alibaba, JD.com not being impacted at all basically. Well, that's it for today. Thank you for watching, and hopefully until the next week we will be able to buy another stock, and so we can discuss the reasons why I did it. Have a nice day and see you next time. Bye.